Well, let's break down the recent inflation numbers now. Joining me for this, Mr. Ayodeji was the MD, Optimus by Afinvest. It's great to have you. Happy Friday.
Yeah, good afternoon. Great to be here.
So it's another rise for the inflation rates. The rate of rise is even higher at about 2.64 percentage points. But I'm guessing no surprises here, right?
Yes, it's in line with the expectation. So we are projected about 3.8. So it's higher by 8 basis points. But the reasons are not new. And when you look at, because inflation is measured on a year-on-year basis. So when you look at the exchange rate last year and this year, it's more than almost on 100%. You look at the fuel price from last year to this year, that's also close to that percentage change. So when you look at what are the major drivers, when you check, you would see that even based on the MBS reports, food and the beverages are still the major drivers, which contributes about 17% to the overall inflation, and followed by energy. You look at the tariff rates from here this year compared to last year. So you can agree with me that the inflation rate figure is showing reality. Even for some will also be of the view that it should even be higher than that. But it's a basket of different products, and as a result, it evens out. So, but when we say, okay, what does this mean? This means that purchasing power of the average Nigerian continues to decline. What if you are able to buy 3 units of a particular item in the past? It may be tough to be able to purchase 1 unit of that particular item. That is tough. And beyond even from the consumer perspective, you look at it from the producer perspective too. If there's less demand, it means that there will be less requirement for employees to produce. And as a result, if production is also going down, the unemployment would increase. So it has its impact on the cost of living and also standard of living.
And it's the same, culprits again, fuel and transportation costs. We're seeing high food costs. Do you think we're expecting too much, from this government and our economic, managers, expecting prices, not to be this high?
Yes, I think that if we look at one of the main reasons for higher food prices, insecurity is a major factor. So you look at most of the food producing area, while flood raised significant havoc this year, which impacted on harvest. But even a lot of farmers are having to pay in some areas to access their farm. And all these costs will be factored in. Secondly, you look at infrastructure. We will need that's moving things by road from the north, from the food producing area to the west or to the south. Who pays for that? So we'll also pay for that. So the cost of moving them has also increased. And as a result of that, it's going to impact on the cost of the item. So for us to tackle this, the number one issue to take care of is insecurity, so that there can be cultivation. Before we even start to talk about improving the yield per hectare and even movement of goods across. So that's the number one factor that needs to be tackled. If that is taken care of, it would impact, because once production improves, it's a demand and supply. Once production improves and there's more supply, then it will be able to match demand and prices would normalize. So, and these are like basic things that it looks complex, but these are things that the government should find a way to resolve. We're all aware of the exchange rate, which also has direct impact. With the current floating regime, we will need more dollars for us to be able to sustain to earn more dollars for us to be able to sustain the current exchange rates based on the demand and willing buyer, willing seller methodology that we currently use. So you would say that some of these things are things that they are not beyond what we can solve. So we just ask government to intensify efforts to ensure that some of these things are taken care of to reduce the rate at which prices are increasing.
How do you see this impacting the equities market? We have the Friday trading session. This week, it's been back and forth, between the bears and the bulls in the market. What are you expecting for today?
We think that for that, the higher inflation rate will impact on cost of doing business, which will reduce profitability. But there are some of these companies, you look at the agri sector, because of the agri sector, because of some of the items that they sell, the substitutes are less. Most of the producers will prefer to buy in Nigeria rather than import. So we expect that they will also continue to also do well. Even you look at the telecom sector, beyond the FX losses, which is as a result of FX challenges, their top line in terms of revenue is also improving. And once we see a major tariff review within that space, that would also open up more opportunities within that. The banking sector will lead, we think will lead the pack in the coming year because of the recapitalization and the high yield interest rate environment. So when you look at their 9 months results, making significant income from interest income, but that's investment in securities, that will continue to propel the bank. So for long-term investors, we think that we'll begin to see early bird positioning ahead of full year corporate action that we'll see in the first quarter of next year.
All right. I don't know about you, Mr. Ebo, but I'm getting exhausted with these higher prices at this point. But personally, do you think Nigeria will overcome this season, higher prices, weak currency, weak purchasing power? Will this ever be a thing of the past, or is this just going to be here for longer?
No, these are problems that are not impossible to solve. So it's for us to be deliberate to win. Once you understand the reason for this problem, say once you have that, you're able to understand that reason, then you are 50%, you have solved that problem. So we need to, once we understand that FX fits significantly, so our FX strategy, do we need to change to manage floats to reduce the rate at which we continue to depreciate? Insecurity, crude oil theft. So these are things that are within what government can solve. And we will just continue to employ that. Efforts should be intensified so that we don't continue to pay for some of these inefficiencies, which impact on cost of living. It's really tough in Nigeria now. We would say that we spend our spending is benchmarked to dollars, while income is not rising at that corresponding level, and it's making it difficult for Nigerians to survive.
All right, definitely so much to unpack there, but we'll see how all of this impacts the next MPC meeting by the Central Bank of Nigeria. But thank you so much, Mr. Ayodeji Ebo, the MD, Optimus by Afri Invest. Great having you today.
Yeah, great to be here. Have a great day.
You too.